the market has now had the best 12-month, right? So the last year, it's been the strongest 12-month risk-adjusted return for the market since 2018. The only other period in time that has been stronger than that was in 1995 and 1997. But let's talk about what you need to know before the bell this morning. As we get ready to wrap up the month, the S&P just really, and we talked about this the last couple of days, just not doing much here. We have a very narrow compression right now in the price of the market as, really just kind of heading into this election. We kind of talked about, potentially the market de-risking here a bit. And they've been doing it, but just very quietly behind the scenes. There hasn't been a real aversion to risk heading into the election. But there's also not a lot of bets being made over the last couple of weeks in terms of the election either. Markets have just been very, very flat here and closed down yesterday. Now, the good news is that the market just kind of continues running right along this 20-day moving average, just simply holding that line of support. And every time the market comes down to that level, market finds buyers. Today, though, if the market opens down, we're actually going to take that 20-day moving average out. So again, we could see if we do close below the 20-day moving average, that does bring the 50-day into range here between Friday and Monday. We'll see if that happens. And again, depends on the outcome of the election as well. Also, the Fed meeting, et cetera. But we're threatening to take out kind of a really crucial level of support today that could lead to a bit more sell-off in the market because of all these algorithms. All the algorithms are kind of watching that 20-day moving average. And so if we take that out today with any type of volume and close below it today, we could see this market move lower. Now, the market could open up this morning or open down this morning and then reverse in the day, end up positive. We've seen that happen before. So we'll see, today, and we'll have this in tomorrow's commentary, but we'll see where the market kind of closes today because that'll kind of give us an indication of what happens next. These very tight compressions of price are going to give us, some idea. And as we talked about previously, we have the sell signal in place. That's why we haven't had any real advance in the market here. Now, and again, as we said before, just because you have a sell signal doesn't mean the market sells off. It just means that you're probably not going to go up in price because if you did, then you wouldn't have a sell signal. But again, we've kind of been stuck here for the last couple of weeks heading into the election. That's not surprising. Again, a lot of investors right now just not knowing what to do. As Danny and I were talking about yesterday, there's a lot of investors who go, so I'm not doing anything until after the election. The problem with that is that if we happen to know the result of the election by, say, Wednesday or Thursday, then this market could take off very sharply, depending on the outcome, one way or the other. So we'll see what happens. But again, just the challenge of waiting is going to be playing catch up one way or the other. If the market cracks lower for some reason because of some outcome we don't like, now you're too long equities, you're trying to work yourself out of it. If you're too short equities because you're convinced the outcome is going to lead to a decline in the market and the market rallies 20 or 30%, then that's going to be another issue. But speaking of returns, I thought this was an interesting stat out yesterday. The market has now had the best 12-month, right? So the last year, it's been the strongest 12-month risk-adjusted return for the market since 2018. The only other period in time that has been stronger than that was in 1995 and 1997. So again, 1995, 1997, that rally continued for another couple of years. Then, of course, you had the dot-com crash. 2018, that risk-adjusted return went to a 20% correction by September. So again, you've had a very, very strong return in the markets. And at some point, we're going to give some of this back. Now, that's probably not until next year as we get ready to go into the seasonally strong end of the year. But again, we've had a very strong rate of return that is probably not sustainable as we move into 2025. So just kind of something to keep your watch on. All right, that's what you need to know before the bell this morning.